Good morning and welcome. Thank you so much for being here. Buenos días, bienvenidos. We're welcome to another session on AI. We're seeing tons of hype here, and as the title suggests, we're going to do our best to go beyond the hype and speak about real long-term value and how we can all achieve it. Thank you so much to our panelists here today. Thank you especially to Christian for sponsoring the conference. You'll notice his logo on all of our lanyards. My name is Hunter Bergschneider. I'm the CFO of the Global Ultrasound Institute. We are a AI-enabled health tech company in the clinical services industry. It's a global company. We're based in the US. We have operations in the Philippines, Africa, and Europe. And we're raising a seed round next year. I'm also the founder of Mountain Cutter, which aims to provide late-stage talent to early-stage startups. I'll let the panelists introduce themselves, and we'll turn it over to Christian first.
Thank you so much for the introduction, also to VDS for having us. I'm Teichmann, the CEO of Burda Principal Investments. We have started 10 years ago. Have built an international sort of growth equity platform with offices in Munich, Berlin, Singapore, and London. And we are also very active here in Valencia. We have also invested here in companies in Valencia. So yeah, it's great to be back.
Thanks for hosting us again. The second day of VDS is fantastic. Excuse me. CEO of TechBBQ. We are basically a community and event based in Copenhagen, similar to VDS. But my kind of full-time job has been with a couple of venture funds and primarily now with venture capital based in Germany called Identity Venture. And we've been investing in LGBTQ plus founders, the only one in Europe. And we're doing series pre-seed to Series A.
Wonderful. So let's start with the basics. What actually is AI as infrastructure? What does that mean to you all? Are we talking about software, agents, CapEx, something else?
Well, that's a very good question. I mean, there are many definitions out there, right? So one is clearly, when you think about sort of AI infrastructure, it's obviously the AI tech stack, and that starts, with hardware. And compute power, and then obviously, it goes up to the chip layer, and then, into large language models, foundation models, and then, the fine-tuning, the middle layer, and then the fine-tuning, and the applications and agents on top. But I think when it comes to infrastructure, and I think this is super important, we should not forget that tech sovereignty and the AI infrastructure is also deeply linked and closely linked to energy, right? I think that is something we need to be aware of, in particular here in Europe, that this is very closely linked, and I think we have a couple of sort of competitive disadvantages we have to overcome. But I'm very positive we will be able to do so.
I see AI infrastructure at three levels, three layers, and one is definitely kind of the actual foundation, which is cloud and utility and so forth. And we have the middle layer, which is enabling infrastructure, enabling what's happening in the top tier level, which is the foundation, and that means like APs and so forth. And the last one is the social infrastructure, talent, governance, and what is actually kind of on the governmental level and how we can impact the actual foundation.
So this is a complex space. Obviously, there's a lot of nuance here. There's a lot of different layers. The Global Ultrasound Institute is doing something even a little bit different, where we're trying to build the infrastructure in health systems to bridge the hardware sonograms, the ultrasound machines, with our software cloud, and we have an AI that can understand everything that's going on with any sonogram in real time. So there's a patient medical record infrastructure with real-time diagnostics that we're trying to build out. Christian, you mentioned competitive disadvantage in Europe. I'm curious if you want to speak a little bit more about that, and Sam, also curious for your thoughts here. What actually is going on in Europe in the space? What's going on globally, and how is Europe at a disadvantage, and what can the founders in this room? Yeah,
that's a good question. So while what I meant by that is when OpenAI was training their ChatGPT model back in 2022, they had access to 14 times more compute power than we have in entire Europe together. Right? So this is something we need to be aware of. It's not that they were the smarter people, or they did something super special. I think we had a lot of great teams here in Europe as well, but they couldn't scale as fast as OpenAI because of that infrastructure disadvantage, right? And that's something we need to work on. And there are many ways to overcome that. And I think there's one other thing that we should not forget is this is not a first mover thing, right? So when you think about sort of the computer age or the computer journey, then also the mobile journey. I mean, at the beginning we had Nokia and Siemens, and no one is talking about Nokia and Siemens today when it comes to mobile phones, right? So this is something we have to be in Europe. We just have to focus on Europe and basically build our stuff over time. There will be power management systems that will reduce the energy and the cooling requirements for chips, etc. So I think there is it's just a matter of time that Europe will catch up. And I think the other thought I have here is that we need more Airbus ideas, right? What I mean by that is when Europe is joining forces, and Airbus is a good example. Airbus is now by far the largest aircraft manufacturer worldwide. They sold almost twice as much aircrafts than Boeing. So if we join forces in Europe, then I think we can be very competitive.
Adding to that, I think you may know, but in 24 to 2025, 31 times, like in the US, there was a 31 times more consumption of power because of AI. And I believe in Europe, we don't have that infrastructure right now, and hopefully we get there eventually, but this consumption, it has been rapidly going up and up because data centers and copied with OpenAI solutions, it's gigantic. And of course, cooling system, we are not ready for that infrastructure. And there's another disadvantage here. We spoke in the backstage. It's cloud services. And I think we're going to get there eventually where we would be challenged by US because of the cloud services. Imagine the next, I think there is an AI bubble. I'm sure in the conversation we're going to get there, but there is also geopolitical and tariff bubbles right now, which it would actually work in our disadvantage eventually.
So we're in a global environment. It's hyper competitive. Seems like there's a security issue here. You're both investors. I'm curious about your deal flow. Are you seeing compelling startups and scale-ups cross your desk that have solutions to these challenges?
Yeah, we see quite a lot in power management and battery management. As I said, I think this is a big topic to get the heat out of the chips. That's important. But then we see also opportunities across the stack, right? But I think the biggest challenge for us as investors right now is to find out what is just a feature and what is a real business, right? That has a reason to exist in the next 2 to 3 years, 5 years, because obviously many things shoot up and then plateau or even disappear because they are just a feature and they should be a feature of something else, but they are not a sustainable business. I think that is the biggest challenge I think right now in the age we are living in.
We see a lot of good companies right now, but as you said, like the real purpose is not clear right now. I think everybody's using the hashtag AI for the companies, and it's very diverse where they use AI, and like we are all confused in different versions of AI world. But like what everybody would love to see is the defensibility of the company. What are they going to really challenge? And diversity of perspective, where they're really going to apply the solution they're looking at. And also, to be honest, it has become more challenging for investors to identify good companies because, you know, everybody is doing this buzz at the same time, but good companies are challenged by governments and policies as well. Because tackling with the infrastructure, you need policymakers to change. The policies are influenced by kind of, you know, power providers, infrastructure providers, and so forth. So there are amazing good companies, but bottom line, they will get to be challenged by policies and governments and institutions to address the real issue.
That's really interesting. So how do you cut through the hype? What's your approach? How do you evaluate deals, and what can founders do to differentiate themselves in the marketplace?
I think the key thing, you know, we are, you know, focusing on is, you know, right now are two things. One is the quality of the team. I think this is super important, and the other thing is to work with that team on the differentiation of that company that really matters, right? So is this just ultimately a Me Too thing, or a something that is just existing there? Or is this something that has a reason to exist in the next 5 to 10 years? And that there are for us, when we look at those companies, AI companies, it's two things. One is you have to basically integrate deeper into the stack. And then the other thing, the other dimension that we are very convinced about is that this company must be able to create a network, so that this is that you basically can you cannot be substituted by another company or another product in no time. And I think this network or networked product in the end of the day, and the depth in the integration, the depth in the tech stack, I think is super important.
I think network part is very interesting. Dependency to other solutions, actually, what I've seen more and more these days. They're using a product to be attached to the other one. I think as we see that product or that software or the solution they're providing be as detached as possible to other solutions, that becomes more interesting. And in my opinion, these days, I'm really interested to look at boring solutions, but resilience and long-term effect of that resilience. That is actually interesting for us, and for me especially, to see what they're really doing and what they're challenging, basically.
Super interesting. Let's talk about long-term or short-term. This is a really nascent but rapidly advancing space. How do you think about a path to cash flow break-even? How do you think about an exit strategy? How do you evaluate those opportunities in this very complex landscape?
Christian, actually, I would love you to bring up that conversation you had recently with the banker. I think that was a really good in-depth conversation. If you can give us a...
So I met a senior banker of a big global investment bank just 2 days ago at a dinner. And he was saying, so we were speaking about sort of the IPO market as an exit, for venture capital businesses in general. And I think that is one of the biggest challenges we have as an asset class. That it has become much harder to exit businesses and return capital to investors. And I spoke with him about sort of the IPO window and when it's opening again. And he said the problem is that the cash or the available capital in funds of public investors is not growing. So in end of the day, you would have to shift money away from already listed businesses into newly listed businesses. And that obviously makes it quite hard to fill a book, because people would have to reallocate money either from already listed businesses, or they would have to reallocate money from private capital into public capital. So this is this is going to be, a longer process. That's not something, that changes overnight. But there's one other thought, when it comes to, cash and cash break even and the way to look at cash profiles of these AI companies. There's just one thought I want to leave you with is, everyone is talking about the massive cash burn that OpenAI has with 115 billion, I think until 2028 or 2029, what they said. But when you think about this, when you look at it in an isolated way, you are shocked and say, how can this actually, be sustainable? But you have to look at it, in the ecosystem. And I think that is something the Americans have been always super good in, is basically create these networks, right? So when you look at the triangle between NVIDIA, Microsoft, OpenAI, and then also, Oracle that comes into play, that ecosystem is printing money, right? So OpenAI is actually, yes, they are burning 115 billion, but this entire ecosystem together is creating, has a massive, revenue growth at a very high margin, right? So an NVIDIA is actually, for them, it's not that difficult to invest 100 billion into OpenAI, because the development of OpenAI is creating so much revenue for them elsewhere. And I think that's the way to look at it. And I think that's also the way, we have to think about what we can learn, from the Americans here in Europe, that we, need to think in networks much more than I think we do so far.
Going back to kind of that triangle, NVIDIA alone, they invested around 57 companies in 2025, and they can easily write checks 100+ million. And that capital in efficiency in the space AI has reflected to Europe as well. They started coming and investing more and more in European companies. And Europe cannot basically cope with those numbers. Writing those large checks, sadly, is very, very difficult for a lot of VCs and companies in Europe, right? But going back to IPOs, we recently had a good IPO, Klarna, Sweden-based company, and they IPO'd. And we have so many interesting companies, and companies like Synthesia, Victor, and Lovable, and so forth. They started being so vocal about they don't want to IPO in Europe. I think role models actually need to play a role here. Just say, you know what, let's trust the system and let's IPO in Europe, basically, when the time comes. But they're very vocal. I don't want to trust Europe, stock market. And that actually has a ripple effect. And the startup will start thinking ahead, like, I don't want to start, the process of IPO in Europe, basically. And IPO in the US, other countries might be the priority for a lot of companies right now.
So thank you so much. So very briefly here, we're running out of time. Are we in a bubble? And if so, do you have any advice for the founders and investors in the room?
I think there's a lot of talk about a bubble. I think we just have to, I think there won't be a bubble if we build, I come back to what I said earlier, if we build companies that have a reason to exist, that have a differentiation that matters, then I think you have a very, very sustainable and healthy ecosystem. And then clearly things that doesn't have a strategic moat, no clear differentiation, they raise, money at a very high, valuation, then eventually obviously disappear, right? So I think it's also, it comes down to all of us here in the room, really, when investors, founders, everyone. I think it's in our hands whether this is going to be a bubble or not.
It's a yes and no, in my opinion, to be honest, because we should start looking ahead and look at the influence of AI in the long run. And as you may have seen, our parents, the older generation, they're adapting to AI. In a dot-com boom, that process was far longer. And so many people, they didn't have access to internet, and they still don't, right? And I think adaptation of AI has been really fast. And hence, it may remain a bubble, but different version of bubble. I think humanizing AI, it would remain the biggest challenge. And it will continue being a bubble, because an ethic part of the AI, I think, would remain a government, social challenge for years to come, how to differentiate what's true and what's not. In terms of what the founders should focus, again, it's money follows hype, and there's a hard investment right now. Tackle things which it would influence the infrastructure and deep tech, because that's in my opinion, that's an area a lot of founders, a lot of companies haven't managed to crack. Part of it's influenced by policies. Of course, governments need to help, but I think deep tech is an area we need to look at more deeper.
Thank you so much to our panelists. Thank you so much for being here. I'm leading a workshop later today on how European founders can raise VC capital in the US. Hope to see you there. And have a great day.
Thank you.